Tomo Kinoshita. He's Deputy Head of Asian Economics Research at Nomura International. Tomo, good to see you. Welcome to the program.
Good morning.
I'm curious what you make of this rate cut by China and the fact that they did it on a trading day, not on the weekend.
Yes, yeah. Well, I think that the China is faced with the significant downside risk, and what's happening is that the exports are slowing, and also housing investment is weakening, and infrastructure spending is very stagnant. So what they need to do is to really stimulate the economy, and I think that it is, although this is a surprising move, I think this should stimulate the economy in a way that the authorities are thinking about.
So investors today might be asking CPI numbers that come this weekend, trade, the export and import figures for May. Do you see them being significantly worse than expected? Is that why they would accelerate this announcement?
Well, I think that we should think about the kind of weak side of the economic indicator out for tomorrow. Well, the fact of the matter is that the final demand is really weakening, and also China is faced with the risk of inventory destocking. The inventory level has risen significantly over the past 4 months, and I think right now still it is accumulating, and probably in the next few months China is faced with the downward pressure on this.
And that would of course impact industrial production then, because if you're trying to get rid of inventories, you're not producing as much.
That's right. It should affect the industrial production and overall economic growth for China. So we now think that there's a high risk that China cannot achieve 8% growth for the second quarter. So we need to watch very carefully about the tomorrow's announcement.
What is your projection for Chinese growth in the second quarter?
We are currently projecting 8.2%, and up from 8.1% in first quarter. But we see a significant risk of downside.
I've heard two schools of thought today from economists, and one is that the fact that they've undertaken this interest rate cut is a signal that they're going to keep the economic growth moving as best as they can. Perhaps the more pessimistic view is that things are much worse than expected. The downside risks outweigh the upside risks. Do you think what's happening globally and in China domestically that there's a real threat of a hard landing?
Well, I don't think that hard landing is really a possibility. Because yes, that the export is really at risk because of what's happening in Europe. But China has a really flexible. The policy can respond really quickly and flexibly in terms of a policy response, and that's the strength of China. And I think that that should really keep China going in the second half. So even though the China is going to have a weaker growth period for a while because of the inventory destocking, we still think that toward the end of this year, the economic growth should pick up moderately.
Let's talk about the European crisis, because we just saw Spain downgraded overnight, and many questions swirling around the Spanish banks. How does Asia deal with this European crisis, and do you think Asia has the continuing capacity to withstand it?
I think that's a very good question. The fact of the matter is that the non-electronics exports had started to decelerate sharply from the beginning of this year, and that's exactly caused by the European situation. And even though the electronics exports has been still kind of rising, this rise has been kind of offset by this European fiasco. And then so with this, I think that Asia is faced with a significant risk. But the good news is that Asia has a firepower, fiscal firepower and monetary policy firepower, which they can utilize in case of a significant economic downturn.
And in terms of industrial production, it's been subdued in many economies across the region. Isn't that a key threat? I mean, these countries that export to the United States, to Europe.
Yes, I totally agree with you. We have seen some dip in industrial production growth in the fourth quarter last year, but it seems that the dip is coming again. So really the risk is a double dip industrial production growth, which is the real threat that we are faced with in Asia.
You noted monetary policy and robust loan growth in some places in Asia in recent years. One reason why central banks have not had to cut interest rates aggressively at the height of the crisis. Do you see that scenario changing now that China has unleashed this interest rate cut?
I think that the central banks in Asia have been watching very carefully what's happening in Europe later this month. So depending on what they do, the central banks can act. So now good news is that the inflation is not really a big concern now. We have seen a drop in oil prices and commodity prices by more than 10% in May, which should enable the central banks to cut rates if they wish to.
Tomo, we have to leave it there. Appreciate your insights on what is an important day with this move by China. Tomo Kinoshita, Deputy Head of Asia Economic Research at Nomura International. Thank you.